And once again, everyone, Bryan Devore, Devore Realty Group, Berkshire Hathaway Home Services, California Properties, with another Monday market moment. Today, we're going to answer the question, how are lower rates breaking the trends? First, we got to talk about what are the trends, and then we'll talk about how rates are breaking them. First, let's look at the most recent stats. Right now, we have 6,280 homes for sale throughout San Diego County, down 100 from last week, with a median list price of $939,000. Average days on market is 57. Pending sales, 2360. That's up 106 from last week. Well, here's our first trend. Usually we start seeing even rather demand going down, but it kicked up. Median list price, $865,000, lower than it was the week before. Average days on market, 38. Months of inventory is going up a little bit. It was 3.07, now it's 3.17 months of inventory. Here's a chart showing total actives and total pendings. And you can see that we had seen the number of homes in escrow flat, kind of going down. It ticked back up. Here, last week, how many homes came on the market? 722, 52 fewer than the week before. Usually around this time of year, that's what happens. Median list price, $899,000. New pendings, though, 416, up 136 versus last week. Huge jump in the number of homes that went pending. Median list price, $862,000, lower than the week before. Average days on market, 36. New pendings listed within the last week, 16. Within the last 2 weeks, 117. So 4% of homes sold in 1 week or less, 28%, so over a quarter, are selling in 2 weeks or less. That's both numbers are higher than the week before. Last week, we saw 354 homes close escrow, increase of 36 versus last week, with the median list price of $929,000, $950, and a median sales price of $930,000, both a little bit lower than it was the week before. Average days on market, 35. Least expensive sale was in San Marcos, $206,000. Get ready for this one. The most expensive sale was in La Jolla, $47 million sale in La Jolla last week. Very nice home. So here's a chart showing new actives, new pendings, and new closed sales. Remember a couple of weeks ago, we saw the number of homes coming on the market jumped up versus the weeks prior. Part of that was because of Labor Day. I think people weren't putting their homes on the market during that week. But we did see a drop again in the number of people putting their homes on the market. But look at that huge increase in the number of homes that went pending. Highest number it's been in several weeks. Why is that? Interest rates. Interest rates went down, and we'll talk about that in just a moment. More closed sales than we had the week prior. Here is the median list price and median sales price chart. We're still hovering around the same levels. Okay, here is Stephen Thomas's reports on housing. This is actually a couple weeks ago chart, and this is actives. You can see the trend line down. We still have way more inventory than we have had in the last few years. You can see where we started the year. Around 3,400 and where we are now. So quite a bit more homes for sale now than we had in the beginning of the year, but still lower than we had before COVID. So we still don't have as much inventory as we have had in the past. Here is the demand, which is the number of homes that go pending in the last 30 days. And you can see that that line right there shows down. We saw an uptick in the number of homes that went pending this past week, but it's still higher than it was last year. Not much, but just a little bit. Demand is still relatively muted, but it is strengthening on lower interest rates. Still less demand than we had in 2022, way less demand than we had before COVID, partially because rates are still higher than they were back then and prices are much higher. Here is expected market time. And usually this time of year, we saw last year in 2024, the expected market time was going up. And now it's going up, but not quite as much. It's actually going to start probably flattening out once some of these other numbers come into play with the homes going pending. Expected market time is still higher than it has been in several years, but that's moderating a little bit. Here is the balance of what homes are selling, and you can see right now 33% of homes that are on the market are $0 to $750,000. And about 33% of the demand is in that same category. So it's a pretty balanced market when it comes to that. market time is 100 days, though, long time. Last year it was 70 days. 750 to a million, you have more demand than supply. And that's why you have the lowest number of days on market for that price category. And last year was 63, so not much more, 13 more days. The a million to 1.25 million, it's balanced again, all the way up to 2 million to 4 million is when you start seeing more inventory than demand. So it's a generally balanced market as far as what's on the market and what people are looking for, except that 750 to a million, there's still a lot more demand than supply. All right, so what's the effective rates? Well, if you look at where we are roughly right around now, 6.5%, with a mortgage payment on $928,000 home with a 20% down payment, and that's the medians, you're looking at about a 46.92 a month payment. We were closer to 7%, 49.39. It's a big difference for people, 5% payment difference. That's big for people who are living on tighter incomes. Imagine if we get down to 6%, we'd be at 44.51. That's a huge swing of $500 a month between the 7 and the 6%. So that's why we're seeing more demand. More people are out there shopping, even when this time of year we typically start seeing it going down. Let's see what happens in the next couple of weeks. Once the Fed does what they're going to do, will that affect mortgage rates? How much? And will it affect the market? That's it for this week's Monday Market Moment. If you have any questions about this information, feel free to give me a call, send me a text or an email. Be glad to help any way I can. Have a great day and a great week, and I look forward to seeing you next Monday.